All right, everyone. How's everybody doing today? Testing, testing, 1, 2, 3. All right, good deal, good deal. Well, we appreciate all of you guys being here. This is Morgan Busby with the Trading Pub. Sound is good. Real quick, if you can, type in where you're tuning in from today. Always fun to see where everybody's tuning in from. I'm in Alabama. It's chilly outside. Hey, Glenn. All right, DeKalb, Illinois, Seminole, Florida, South Africa. Good deal. Atlanta, Georgia. To Atlanta, Georgia, Chicago. Sue, I'm coming up to Chicago at the end of this month. It's going to be kind of a shock. Like cold down here is about 50 degrees, so I have a feeling that it's a little bit colder up there than that in January. All right, yeah, then we've got Canada and Poland, Columbus, Ohio, Nashville, Tennessee. Good deal, good deal. All right, Oregon, okay. All right, well, good deal. We appreciate you guys taking the time to join us today. I thought we'd have the first webinar of the year kick off, and kind of the plan here is go through a couple of trade ideas and strategies in the market, and then we'll look at actually some examples and kind of get you guys to help do some analysis, and we'll find some trades to possibly look at taking. So real quick, if you haven't been to a Trading Pub event before, you guys know all of our trading education's free. We'll record this event, we'll put it on our website, and email you a link as well in case you have to leave early or in case I just absolutely blow you away with awesome education and you want to hear it again. So, but hopefully you guys will enjoy the presentation, and if you have any questions throughout it, just type it in. It's very laid back, and I hope that you guys enjoy it. To tell you a little bit about the Trading Pub, the mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The Pub is the place to receive quality education, all while interacting with traders and investors who are just like you. So throughout the Trading Pub, obviously we want you guys to learn about the markets, to enjoy your time here, and then we also try to, in addition to learning to trade well, we also want to do good. And so 10% of our revenues that are generated through TradingPub.com are actually given to charities. Most of the charities we work with focus on inner city revitalization and workforce development. So I'm going to share this link with you. This is kind of a cool campaign we're doing right now. You can, maybe bookmark it and watch it later. But again, kind of about one of the nonprofits we're working with. Our website is tradingpub.com for those of you in the Twitter sphere, or if you're one of the billion plus people in the world on Facebook, you can check out our page there. We'll post a recording of today's webinar on those feeds as well. Like I said, we're very laid back. The only rules we really have, if you're going to be here, we just ask that you be cool, that you not be that guy on the left, but you learn. Like I said, we're not here to sell you anything. So if for some reason the presentation is not for you, all we ask is just that you log out and go and enjoy the rest of your day. So what we're going to be talking about today is defined risk trading. And so real quick, how many of you have heard of NADEX before? Just type in a yes or no. We're going to do two questions real quick. One, if you've heard of NADEX before. Okay, most of you guys, if you've been with us a while, you probably have. If you're sort of new to the Trading Pub, you have not. And so we're going to talk about that today. And then the second question I'm going to ask you, all right, so thanks to everybody for responding. How many of you, and we mentioned this in the email, how many of you have been right on a trade before, but you end up getting stopped out before the trade happens, and so you lose money, but you were right on the trade? So like, hey, I think the S&P is going to go down today. I get short, then I get stopped out at the high of the day, and then it drops 15 points. Yeah, I think everybody, if you've been trading long enough, it's happened to you. I know it's definitely happened to me, more times than I'd like to admit. And so we're going to look at a couple strategies today that could hopefully help you miss those mistakes that happen where you're just right on, and then all of a sudden, something happens and you miss out on it. So we're going to look at that. But NADEX it stands for the North American Derivatives Exchange. It's a CFTC registered exchange, and so when you hear people talk about, and I've seen a lot of increase in this, but people kind of educating about binary option type products. And so what you have to be careful with is look at who's behind the trade. So, and when I say that, how many people in here, you can just type in yes or no, how many people in here have been to a casino before? So again, how many people in here have been to a casino before? Okay, probably a lot of people. All right, Do you think casinos are built because the people that walk into them make money or lose money? So if you go out to like Las Vegas and you see all these huge casinos, right, they're built because people lose money. Okay, now there's the reason people go is some people enjoy gambling. Some people make money with it. Very few do. But you know, it's typically the atmosphere, or there's a big conference. I know that's typically why I go to Las Vegas. Is there's a big trading conference every November, and so I typically head out there for that. But yeah, casinos are built because the house always wins, right? And and so what you have to be careful with binary options brokers is that a lot of the brokers you trade with are actually the house, and that means that you're trading against them. And so you got to ask yourself, whenever your money's on the line, say, you know, do you think that if the person who's on the other side of the trade has an interest in you losing money, do you think the odds will be stacked in your favor? And just yes or no, do you think the odds are, you know, just like a casino, the odds are not stacked in your favor? And so always look out, and so whenever somebody's on the other side of your trade, it's in their best interest for you to lose money, and so you always want to be careful with that. Well, a lot of binary options websites you see or offers you see, that's the situation that's happening. The broker's actually on the other side of your trade. All right, so a lot of them are operated offshore. There's a big group in Cyprus and other places, and not to say that that's not a legitimate business or it's a scam, but you just have to understand it's not a regulated firm. And so NADEX, on the other hand, is a regulated exchange. It's based in the U.S., CFTC regulated electronic futures exchange. So when you trade on NADEX, you're not trading against the exchange. They're just facilitating the trades. You might be trading against me, you might be trading against a market maker, you might be trading against XYZ trader, you know, up in Minnesota, who it's so cold they don't have anything else to do. But again, you're not going to be trading against the house. And so that's important to understand. The way that it works is you trade on the exchange by becoming a member of the exchange, and there's no membership fee. There's an initial deposit in your account of $100, and this is kind of where it gets cool. And when we get into the contracts, you guys who have traded futures and forex will understand kind of the cool feature of this. But there's no commission. There's just an exchange fee of 90 cents per lot per side. So if you trade a one lot, to buy and sell would be $1.80 round turn. All right, so that's your round turn, basically exchange fee. There's no commission. The cool thing with that is that they cap fees at $9. All right, so if you trade a 10 lot, that is $9. If you trade a 20 lot, that's still $9. All right, and then if you trade a 30 lot, guess how much that is? So again, how much would it be if you traded a 30 lot in exchange fees? Yep, exactly. So you guys are paying attention, $9, right? So it benefits you as you increase your trading size that your fees do not go up. So that can be a very beneficial thing. All right, so we're going to talk about two types of products. One is a binary option and one is a spread contract, and I'm going to show you how those work and three strategies that can be used for this. And then you know, recommend that you guys test it out on your own with anything, and this is a good rule of thumb. Any strategy somebody teaches you or any email you get that claims, hey, this is a great strategy, you know, apply the strategy and you'll make, you know, all this money, which is what some people send out, unfortunately, when it's not true. But again, always test a strategy, you know, before implementing it with live money. So again, that's important to understand. But basically, a binary option is a simple short-term contract. There's intraday and daily contracts. There's a limited risk to the trade, and that's kind of the key with NADEX products is every trade has a defined profit and a defined risk, and I'll show you some examples of that in a little bit. But basically, the way a binary works is it's a yes or no proposition. It can be traded long or short, and it's priced for the individual trader like you and like me. You know, we're not trading a fund necessarily. We're trading our own funds, right? I'm trading the Morgan fund. You're trading, you know, the Peter fund and the Jim fund and the Tony fund. You're not, you know, trading millions of dollars from several different investors. So again, it's really priced for the individual trader. Now, this is a quick question for you. If you look at the S&P right now, do I have any futures traders in the room? Just type in a yes. Futures traders. Okay. All right. For those of you that trade futures, here's a question for you. The S&P contract right now is trading at 1825.75. All right. And for those of you that don't trade futures, you can answer this question as well. So 1825.75 is the current price of the E-mini S&P futures. So if you don't trade futures, think of it this way. That's basically where the S&P 500 index is, okay, give or take a few points. Do you guys think that the S&P is going to be above or below 1830 by the end of the day? So above or below 1830 by the end of the day. Okay, perfect. So Tony, we've got a couple people weighing in. We've got Tony and Jose that say above, or sorry, Tony says below, Jose says above, Sue says below, Jim says above, Thomas says above. So we've got our optimists out there that say this market's going to rally, it's going to go above. All right, well, here's the way that a binary option works. All right, I'm going to switch over here. Give me just 1 second. Okay, everybody can you guys see this platform? I want to make sure you can see it. All right, cool. So the way that a binary option works, I'm going to go over here to indices, click on binary. I'm going to click US 500, which stands for the S&P 500, and I'm going to click on daily. All right. And remember, we had some of you guys that thought it was going to be above 1830, right? All right. Well, I'm going to look at this option right here, and this says that the S&P is going to be above 1829 at the close, which is basically 4:15 Eastern time, so 3:15 Central. And you can see right here the price is about 1825 right now. So you see 1825 right now. So for those that are optimistic, that think this thing's going to rally, we've got to see the S&P rally 4 points to get above 1829. For those of you that are bearish on the market, think it's going to sell off, we want to see the market stay below 1829. So we could see it rally a point, we could see it rally 2 points. We just want to make sure it doesn't rally above 1829. All right. So at 1829 or lower, all the people who said no are going to be right on the money. At 1829 quarter or higher, all the people who said yes will be right on the money. So first of all, let's look at the people who were bullish. Okay, who were bullish. The way you could play this trade, basically, is say, hey, I think this is going up. I think we'll be above 1829. I will pay. Let's say we'll pay $33, all right? So I'll pay $33 and basically expect it to go up. The way that the binary option works, at 4:15 p.m. Eastern time, all right, this option will either be at 100 or 0. So if ES is above 1829, that equals $100, all right? If ES is below, and actually if it's at 1829 or lower, but we'll just say for simplicity's sake, we'll say if it's below 1829, then the option equals 0. Does that make sense to everyone? So basically it's a yes or a no statement. It's either, the market's either going to be above or below that number. Okay? All right. Well, if we pay 33 for it, all right, let's say we pay 33 and it goes to 100, all right, so that means that the market rallies and it goes up. How much money do we make? Basically, take 100 minus 33, right? Is everybody, and you see here where it says 67? Everybody see that? So basically, we risk $33 to make $67. Now, why are they willing to pay us almost 2 times what we're risking? Why do you think they're willing to pay us 2 times what we're risking on the trade? Who knows the answer to that? Right, because the odds are in their favor, right? It's probability. And so right now, the market's below that point. Now, if the market was right at 1829, it would be about 50-50, right? Right, the risk is, your only risk is what you pay, Julie. So we pay 33 for it, and the most we can lose is $33. The most we can make $67. And it tells you here the ceiling and the floor, right? So again, it's not necessarily that they know something or that the market's going to go down, but it's a probability. So think of it this way: whatever a binary option is trading at is kind of the probability of where we should close. Let's look at a different one. Here's 1826, the binary option on 1826. Well, we're trading right about 1826. Where's this? What probability is this telling you that's going to be above or below 1826? It's about 50-50, right? See that? So when we're trading right at the strike price, it's going to be right at 50-50. So that's important to understand. So if I'm trading, let's go back to the first binary option, the 1830 or 1829 option. So we talked about what happens if we buy. Now a lot of you guys thought the market would go down, and let's look at this. If we sell it at say 30, okay, we'll say sell it at 30. All right, if we sell it at 30, what's our max profit? If we short something at 30, what's the most we can make? The lowest it can go is 0, right? So max profit's 30, max loss is 70. Okay, because what's the highest it can go? What happens worst case? This thing goes above 1829, so worst case we lose $70. That's the absolute worst case on the trade. Now here's another way to trade it, and this is something I do with binaries. Typically, if I short a binary option like this, if the market trades to the strike price, I exit. All right. So if the market trades to the strike price, I exit. Now, if the S&P rallies up to 1829, all right, if the S&P rallies up to 1829, where can we expect this binary option to be trading? So if the S&P right now it's at 25 quarter basically, but if it rallied up to 1829, where could we expect this to? Right, it would be trading at 50 at the time, okay? So anytime the binary option is at its strike price, you can plan on a price of around $50, because basically if it's trading right at that price, there's a 50-50 probability. I'll say with the exception of that is if you're 30 seconds or a minute from expiration. So again, if you're right at expiration, it's going to be real volatile. You don't want to be trading around right at expiration time. So the way that works is I sell this at 30 and I've got a max loss of 70, but what I would do on the trade, I'd use that rule. I'd say, hey, if we trade up to 1829, I'll just kind of get out of the trade, which means I'll cover it around 50 bucks, which would give me a loss of $20. So if you look at that, if I'm able to manage the trade that way, I'm basically risking about $20 to make $30. That gives me a positive risk reward, and it also gives me room to work, because if I think the market's going down, I've basically given myself 3 points of buffer period. So if the market rallies a point or 2 points, I'm still okay, and I can still make money, or if the market stays the same, or if the market goes down. So this is a strategy for those of you that are short selling. Think of it sort of like selling premium that you're trying to bring in on the trade. All right, does that make sense to everyone? I want to make sure you guys followed. Okay, all right, good deal. So that's that contract. Now, let's say that you said, hey, it might rally a little bit, but I definitely don't think, I think there's big resistance at 31. You know, we might go up and touch 29 or 29.5, but I don't think it's going above there. Well, then you could bring up the 1832 contract, all right? And you see that's trading at about 1250. So let's say we sell this for 13, and you might look at it and you might say, hey, why would you sell something for 13 and have a max loss of 87? Well, think of percentages in return on risk. Remember how I said that every trade has a defined risk? All right, so let's think of it this way. Let's say we sell this at 13. In order to put on this trade, all right, in order to put on this trade, we have to put up $87. So that's how much cash we put up for the trade. So basically your return on risk is 13 divided by 87. Basically that's a 14% return, all right, on the trade. So if you think of it that way, it's like everybody in the world would say, hey, I want to make 14% on my money today. Well, that's one way to look at it, and it's kind of like a credit spread. Like anybody that has done credit spreads before, think of this strategy kind of like doing a credit spread. And so you look at it and say, well, hey, you know, that's not a whole lot of money to make $13. Well, the key is you do more than one contract. So now all of a sudden you look at this, you do a 10 lot and you make $130. So if I'm looking at the market and I think, hey, this market's negative, I think it's going down, it's bearish, there's big resistance, I think that staying below 32 today is a no-brainer. That's a trade that you can take and you have an edge on it, because basically it's telling you right now there's about an 87% chance or probability that the market stays below that price. That's priced into the market. And Mr. Ruiz asked a question about a 60-second option in binary. I don't trade those. NADEX doesn't offer those. A lot of those are offered in the offshore shops that I told you about. And basically, you think of that's kind of like gambling. Yes, NADEX does have a demo account. I'll get you the link real quick in case you want to kind of test it out. Let's see if I can find this. Get started. I'll get the link for you guys. Yana, can you post the link for a here we go. Here's the demo account. Right, so yeah, with a 10 lot, the loss could be $870. So let's think of it this way. Remember the rule I told you? This is why that rule is important. The rule of using that 50. If this market traded up to 1832, I'd want to get out of this trade. So basically, if you did that, your loss would be about $37. So about $37 per contract if it traded up to 32. So again, that's kind of how that works basically. But it's a credit type trade, so the odds are in your favor. Your risk reward is definitely going to be skewed. It's not going to be like a one-to-one risk reward. But also, you got to look at this and say, hey, we've got 3 hours of trading left, and I think that the market's going to stay below 1832. All right. The problem people have with a lot of binary options is they look at it the other way, and they say, hey, you know, I think the market's going to rally. I can, you know, pay $13 and make $87. We got to look at it and say, well, what's the probability of that happening? It's very low, right? Yeah, so if you got in at the bottom, Linda, so if I got in, let's say I did this trade and I got in it and, you know, brought in $130 in premium and the market shot up, you know, 15 points real quick, that's where I would get in trouble, all right? That's where I'd get in trouble on it and could lose the full amount. But what I would try to do is I'd try to mitigate that. I'd try to exit if we traded at 1832, get out about $50 and take about a $300, $400 loss. So if I'm able to do that on my losing trades, I've only got to be right 2 out of 3 times on this trade, and this trade should give me a much better probability of success than that. And Charles, there's a lot of regulation you have to go through to be located U.S. as a U.S. exchange. A lot of money, a lot of you know, you have to have capital that you deposit. You go through audits, so there's a lot of expense in being onshore in the U.S. and a legitimate exchange. And so NADEX has done all of that. The offshore shops basically have not. So yeah, so basically I could, let's say you and I wanted to open an offshore shop, you know, we could do it, you know, we could go to, you know, a country offshore that has less regulation and, you know, start operating without, you know, basically without going through a lot of the, you know, legal steps that you have to go through in the U.S. All right, so again, that's binary options. Here are 5 rules that I have for this. And I think this is a good rule for any type of trader, but basically understand that you're not the smartest person in the world. And by understanding that, that means that you're going to be wrong from time to time, all right? So again, you're not the smartest person in the world. Number 2, determine the overall market direction. So what I want to do first is determine overall market direction. Remember how I asked, I said, who thinks the market's going up? Who thinks the market's going down? Where you get into trouble is where you just come in here and you have no clue what's going on in the market and you say, hey, I'd like to make 25 bucks. I'll sell this at 25 and make $25. And I have no clue what the market's doing. I don't know if there's news today. I don't know what an important support or resistance level is, et cetera, et cetera. So again, that's where people get in trouble. Don't just trade for the trade. Trade because you have a reason to trade. That's important. All right. When I'm bullish, I look for a binary to buy around 60 to 80, and when I'm bearish, I look to sell around 25 to 40. All right. So again, what I try to do is give myself a little bit of an edge. So let's say that I'm bullish right now on the market. I would look to buy maybe this 1823 binary. And the reason I'd like to do that is that gives me a little bit of an edge. You know, the market could stay the same, could even go down a little bit, and I could still make money. So I'll take that. I'll give up a little bit on the reward side in order to have that trade. So again, let's say I buy this at 67. I think the market's going to go up. That is what I would do. And yeah, let me put this up for you. I'll give you guys a second to write it down in case you want to. So again, rule number one, I'm not the smartest person in the world. Rule number two, look at overall market direction. And if you guys trade options, this is very cool as well to understand. And I think a good process to go through is look for trades that have a good probability of success. And then number five, use the 50 level on the binary option as an indication of the trade and adjust your position from there. All right, JJ, very cool. Good deal. All right, and here's an example of binary options movement that I show. So just to kind of show you an example real quick. Here's a chart. Here's a chart of the S&P that you see. So this is a chart of the market today. See how the market sold off basically all day long. All right. So then let's see if we can get a chart of the binary option. This might be the overall market again. Okay. Here's a chart of that binary option. So this is the 1829 binary option. Tom, I don't believe they are available in an IRA just yet. So here's a chart. You see this chart. So look, so remember the S&P chart that I showed you? Remember how the S&P's gone down pretty much all day? This looks just like the S&P chart, but it's available. This is the 1829 binary option. So look at it here. Remember, this is the S&P above 1829. Notice right now we're trading below that price, but you see that this morning it was trading up at 80. Okay, this option was trading at $80. And you see as the market dropped, the binary option dropped. So you see that. So now it's trading all the way down at 26.75. And the important thing in looking at this is just to explain, you don't have to hold it till the end of the day. You can trade it throughout the entire day. So if you bought it at 80 this morning thinking it was going to go up, then you say, hey, I was wrong. You can get out here. You can buy and sell all throughout the day. You could have shorted it. Let's say you felt like the market was breaking down. Maybe you shorted it here. And it drops around here and you say, hey, I'll cover and take my profit. So again, you can trade it throughout the day just like anything else that you see in the market. All right. All right, so again, the strategy we went through, and yeah, there's, are there any maximum number of trades or period? No, there's no like day trading rule with this. So let's see. Yeah, and Chip, thanks for answering that. Yeah, IRA funds can't be used if you're trading directly with the exchange. They're working on bringing an FCM on board. Once that happens, you would possibly be able to trade it with an IRA. And yeah, that's the liquidity. So like, let's look at real quick. Look at the liquidity on an option. So like, here's this 1826 option. See the 250 there, 250 and 250. That's how many contracts. That's how many contracts right there you could trade without moving the market. Now, with this, because you're a member of the exchange, you can place an order in between the bid and the ask. So like you see it here at 46.50. If I wanted to try to, hey, buy it at $45, I could do that. And just place the order, and basically I'd be working the bid if I tried to do that. So again, typically there's going to be about 200 or 250 contracts at each bid and ask, which means that you could fill up to 250 contracts. And David, yeah, it seems like you have to win 70 to 80% of the time. That depends on what strategy you use. Sorry, there you go. I flipped back. So here you go. Let me pull this up. So you see here, there's 4 contracts right there, 250, and then you see the next bid's 250. So typically, there's going to be about 200 to 250 right there. Okay, and Andrew asked a question, okay, what's the shortest time frame available? So we were looking at the daily. you see right now, here's a 2 p.m. option. So basically you think every hour. So this option right here will expire actually at 2 p.m. Eastern, so in about 15 minutes. So you see here, and notice here 1824.40. All right, this option right here is trading at 69 by 76. This is going to be very volatile because we're right around the bid and the ask right there. So in the next 15 minutes, if the market drops a point, you see this binary option drop. If it rallies, you see it rally. So again, and you see typically as we get closer to the expiration, the only markets that really have much movement are going to be within a point or two. Okay, and we'll get into spreads in 1 second. So yeah, and like I'm trying to think who it was. Okay, David asked the question. It seems like you have to have 70 to 80% of probability to offset the loss. Yeah, that's the important thing to look at. Which strategy? So there's two types of binaries. There's the low probability, high reward. So that would be a case like, let's look at the looking at the daily of the S&P of a low probability, high reward example would be right here. If I say, hey, I think the S&P is going to rally, I'll buy this above 1829. So look at this example right here. This would be low probability. Okay, it's lower probability because the market has to rally 4 points just for me to make money. It's a high reward. So if probability is low, so probability and reward will have an inverse relationship, and that's going to be with any market you trade, right? So again, any market you trade is going to have that. So probability and reward are going to be an inverse relationship. So if I look at this and say, hey, the probability for me to make money, it's got to rally 3 points. So obviously I'm going to get more return for my risk than I would if I say, hey, we're already 3 points below. Odds are the market's closing below 1829. In this scenario, I'm only getting $30 reward for $70 worth of risk, but my probability is going to be a lot higher. And the reason I think most people lose money in the markets is because of the fact that they get the risk reward out of line in the sense that they take very small losses, or they take very small gains but have big losses. And so the thing that can help with this is that going into it, your worst case is defined. So if let's say that I buy this, okay, I think I'm bullish and I buy this, and we have a flash crash. All right, the most I'll lose is $30, right? The most I'll lose is $30. If we drop 10 points, 100 points, 1,000 points, it's not like I can go into this option and keep moving my stop down and make my loss bigger. How many people have done that before? You got into a trade, you put your stop somewhere, and you ended up moving it down and ended up losing more than you originally planned. Right, yeah, I've done it too. It's not a good thing to do. Typically, it doesn't work out in your favor. And but again, this protects you from that, all right, because there's defined risk. So that's one of the strategies. The other strategy, like I said, the high probability, low reward type trade, that's where you buy something at 80, you sell something at 20, and you're able to do that, right? And yeah, you can control your risk with this. All right, now I'm going to talk about the spreads. This is really a cool thing. So binaries, it's if you're into option trading, binary options are very cool because you kind of already get it. You get the probabilities, you understand that. If you're not a big options trader and you say, hey, I just like trading the underlying market. So this is basically a way, the spread contract is a way to trade the underlying market, but it's a way to do it better, all right? So it's kind of like, hey, I really enjoy trading the S&P, or I really enjoy trading. Do I have any Forex traders in here? Anybody trade Forex or currencies? Okay, good. All right, you guys are going to like this part. And on the binaries, there's Forex involved as well. I didn't get a chance to show that, but here's all the markets that you have on binaries. So you've got copper, corn, oil, gold, natural gas, silver, soybeans. All right, you've got the FTSE, the DAX, the S&P, the Russell, NASDAQ, Wall Street 30, which is the Dow 30. And then in Forex, you've got the Aussie yen, the Aussie USD, the Euro pound, the Euro yen, Euro US dollar, the pound yen, pound US dollar, USD CAD, USD Swiss, and the US yen. So again, those are the currencies and all the markets available that you can trade with those options. So now let's get into the spreads, and this is what I really like. It's basically a short-term contract with limited risk on each side, and think of it this way: it's similar to trading a debit spread in the option market. Basically, think of it this way. For those of you that are currency traders, all right, I'm going to pull up a chart of the euro. So you guys see this chart right here? Everybody see this? This is a 30-minute chart of the euro today, the euro USD. And basically you see here, okay, this is the euro USD. Well, the way this works effectively is that this is the underlying spot market, okay? And you see that it's sold off. Now let's say that I told you you could buy the euro and you could basically have a stop at 136, but you could be long all day. How many people would say, hey, I'll take that trade, you know, where it doesn't, you know, it can't stop me out necessarily, but my max risk is down there, my max reward, you know, this thing could rally back 50 pips, right? That'd be a cool trade if you're bullish the euro, right? Because it's important, you have to make sure that you're bullish the euro. All right, well, that's basically what a spread trade allows. With more volatile markets on spread trading, because it gives you a floor and a ceiling, all right? Gives you a floor and a ceiling. So you can buy near the floor or you could sell near the ceiling. And we'll show you an example real quick. Let me get to this real quick. All right. So let's look at what currency you guys want to take a look at the euro. Is that okay? Take a look at the euro for those of you that are currency traders. Okay. All right. So here's the euro USD. All right, and this is expiring at 3 p.m., so this gives us an hour for the trade. All right, and right now, let's see where the euro is. See where the euro is trading. It's trading right around 136.72. All right, so right around 136.72. Okay, and here's a spread that's 136.70 to 137.70, and the way this works is it gives you a floor of 136.70. All right. So let's say that we look at our euro chart. So I'm going to pull this back up, and we look at our euro chart, and I say, hey, you know, this thing sold off a lot. I think that it's going to rally. How many people think the euro will go up over the next hour? How many people think it'll go up? How many people think it'll go down? Type in up or down if you think the euro will rally or go down. Okay, up, down, up, 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 down, up. All right. So most people say up. Some people, okay, probably about 70-30 say up. You know, Sam says it's sideways. All right. So let's look at this. Let's say that we think it's going to go up as well. All right. So what I'm going to do is I'm going to buy this market. Now, in order for me to be able to get in this trade and hold it for an hour with only $7 of risk, I'm going to have to give up a little bit of an edge, right? Because, you know, nobody's going to take the other side of that without saying, hey, give me a little bit, kind of like insurance. Think of an insurance company. There's going to be a little bit of premium to pay in order for me to have that defined risk. So basically what I can do here is I can look at buying this at 136.77. That's given up about 7 ticks, but I basically able to know that, hey, worst case, I'm going to lose $7 on this trade. If it happened to rally 100 pips, which is highly unlikely, but the most I could make is $93. So the difference in this and a binary is we don't have to have it rally 100 pips. It's going to, wherever the euro closes out, that's where we're going to get filled. So let's say that I wanted to get in, and here now you see it at 136.76, so I can do this for $6. I'm going to place this order. All right, you see order received. All right, order received, so I just bought one contract, and I've got a floor of 136.70 on the trade. All right, so you see I just bought this contract. So basically I'm long the euro. Okay, for those of you that trade currencies, this is like being long a mini lot. It's going to be $1 per tick. So if the euro rallies anywhere above 136.76 by expiration, I'll make money. Okay, and the payout for this, yeah, the payout for this is going to be a settlement. It's going to cash settle. So let's do a little math here. I'm long at 136.76. All right, max loss is 136.70. Okay, so how much can I lose on this trade? What's the most I can lose on this trade? Remember, it's $1. Yep, Jim got it. I can lose $6. All right, let's say that the euro rallies to, and you see where it says current market, 136.73. Well, if the trade closed out right now in the euro, let's say that at settlement, the euro is at 136.75. All right, let's say at settlement it's at 136.75. Well, basically on that trade, if I bought, that means I bought at 136.76, settled at 136.75, so that's a loss of $1, right? So if the euro were to rally to 136.46, all right, let's say that it sells at 136 or 130, yeah, I meant to say 136.46, all right. Sorry, I'm typing in all kinds of wrong stuff. If it traded at 136.96, right, 136.96, that would be a profit of $20, right? So I risk 6 to make 20. Does that make sense to everyone? Yeah, plus, right, yeah, WK, plus I'm going to have $1.80 in commission, right? Or an exchange fee. It's not a commission, it's actually an exchange fee. So I'd have $1.80 in exchange fee. So that's going to be cash settled, right? So I could do that, and basically I'm long the euro for the next hour. Now, the real advantage with this, and in all honesty, if you think about it, it's the afternoon, the euro is probably going to be slow. If you look at this over the past, several 30-minute bars, we haven't seen a lot of movement. Chances are we're not going to see a whole lot of movement this afternoon, but the real power in doing these things is early in the morning when you look at a daily, or if there's big news. So like, let's say that I had an FOMC announcement. Let's say the FOMC announcement was coming out in about 15 minutes, all right? Well, if the FOMC announcement's coming out in about 15 minutes, I know that this thing is about to move, all right? So I could load up on this as sort of a volatility play and say, hey, I think this thing's going to really move. I'll risk $6 to possibly make 100, and that could realistically happen. Another good market to do this with is crude oil on Wednesdays at 10:30 a.m. Eastern when the EIA report comes out. And so basically what you do is you look for a spread to buy it close to the floor. Now let's say we're bearish on the euro. All right, let's take a look at this and see what they have here. All right, let's say we're bearish on the euro. All right, here's one that has a ceiling of 135.70 and, or sorry, a ceiling of 136.70 and a floor of 135.70. So on this, I could basically do the same thing. I could sell it, risk $7, and potentially make $93. All right. So again, if I was bearish on the euro, I could take that side of the trade. If I've got a Fed announcement coming out and I think this thing's about to go crazy, I could take both trades. Basically, just saying, hey, that's kind of like a straddle. Basically, I think this market's going to explode one way or the other. I'll risk $7 on one, 6 on another, 14, 15 bucks just to see what happens. So again, that's kind of a cool thing that you can do. But really, the power of it is if you look at the euro. All right, let's go back and look at this euro chart, and you see how it's now at 136.66. All right. Well, if we had gotten long and put a stop at 136.70, we'd be stopped out of a trade in the futures or the spot market. Now in NADEX, we're still in the trade. So if this thing bounces back and goes up to 139 or 137, basically we'll make money on the trade because we're still in. So that's where I got to, I asked you guys the question, how many people have been stopped out, and then it turned out being a great trade. So maybe our timing was off. We got in a little bit early, and now all of a sudden on this bar that forms, the euro breaks out and we can make money. Does that make sense to everyone? I want to make sure that you guys understand that. Okay, all right, very cool. So we talked about the credit strategy. We just talked about the spread strategy of buying support. Now I'm going to talk about the spread strategy of getting a small edge in the market. All right. So remember how I told you guys that we have to pay up a little bit to get the insurance. Okay. Remember how we talked about that? Yeah, I think I can do that, or I can change it to candles. Style, chart type, candles. There we go. That probably makes it easier to see for you. Okay. All right. So again, let's look at a spread strategy now, and say let's pull up a strategy on the S&P. All right, here's one, 1825 to 1855. So same thing, and if we look at the S&P, let's see where the S&P is trading. Just 1 second here, /ES, and make this a little bit bigger. So you see the S&P right now is at 1827. All right, does everybody see that? Okay, the S&P is at 1827. Well, here's a spread that's 1825 to 1855. All right, and so you say, well, hey, why is this spread trading at 1828.50? Okay, well, the reason it's trading that is because the risk reward. So if I'm going to buy it, if I'm going to buy the S&P, I can buy it here and only risk $39 and basically be long the S&P for the rest of the day, not have to worry about a stop because all I risk is $39, and it's going to cash settle. Well, if you look at it, the underlying right now is 1827.30 basically, so 1827 and a quarter. Well, if you look at that, what's the point differential there? There's a full point difference, right? Does everybody understand that? So if I'm looking to short the market, let's say that I'm looking at the S&P and I say, hey, I think I'm bearish on the S&P. I think we'll probably drop a couple points. Would you guys rather, and let's say realistically your target on the trade is about 1825. Would you guys rather short the S&P, so short ES at 1827.50? All right, would you rather do that? Or would you rather short ES NADEX spread at 1828.80? So if you're going to be short, what would you rather be short? Would you rather be short at 27.5 or 28.80? Obviously, if you're, yeah, exactly. You'd rather be short the NADEX spread, okay? And the reason they're giving that to you is that if you short the futures market, all right, let's say you short the futures market at 27.50, if this market crashes, you'd make a lot of money, right? Because you're short and can continue making money. Well, in NADEX, if you short it, you have a max profit down to, so I'm going to put 5 in there, because 5 NADEX will equal 1 mini S&P. So if you short it here, basically, you know, your gain's going to be capped at 1825. But how many of you have done this? You know how they tell you that, you know, like if you short something, there's unlimited risk because, you know, stock can go to infinity. How many people in here have bought a stock that's gone to infinity before? How many people bought and owned it, right? Yeah, you know, in theory it's possible because it could continue going up forever, but at the same time, you know, there's just as much risk, in my opinion, being long or short. Being long, your max risk is going to 0. You know, being short, obviously it can go to infinity, but yeah, like a tree, it can't. It could, but it hasn't. Okay. Some might argue, hey, what about Apple? Well, you know, Apple goes up and down. You know, there's people that make money being long and short Apple, long and short Google, same thing. But again, from a mathematical standpoint, there's that risk, but you know, from a logical, if you're a trader, you guys know that John B. Yeah, that's what I've had plenty of those too. I thought they were going to infinity, but for some reason they just couldn't make it. But again, this is, you know, so for the reasonable trader that says, hey, I think the market's going down, but you know, in the next 2 hours, I really don't think that the economy is going to crumble to the point that we trade at 0. But I do think it could hit 25. That's a legitimate trade. And you look at it and you say, well, hey, that's a lot of risk because it could technically go to 1855, but again, always, you know, you'd exit the trade. Hopefully you wouldn't sit the same way if you shorted the S&P over here. Hopefully you wouldn't stay short all the way up to 1855 and new highs on the day. You know, more than likely if you shorted the S&P here, you'd probably get out around 1830, 1832. You do the same thing in NADEX. So, but worst case, if news came out that said, hey, the U.S. economy just paid off, you know, the trillions of dollars in debt, you know, due to, you know, a great day in, you know, manufacturing. It's probably not going to happen, but if it did, the market would soar, right? And so that's your max loss if that happens. But you can get an edge, and that's the key is finding ways in the market to get an edge. That's what professionals do, is they look for that little edge that can give them an advantage over the other person that's just out there selling the market. So does that make sense to everyone, the two different strategies? Sometimes it makes sense to give up that edge. Other times it makes sense to say, hey, let's take it. Now, the way this works, see how right now NADEX is at 24 or 28.50. The underlying's at 27. As we get closer to expiration, the two will agree because it's going to cash settle. So if this was 415 right now and the market hadn't moved a bit, you'd see this NADEX option at 1827 even, just like the underlying. So basically, you could about $1.80 or close to 2 points in the S&P just by the market staying the same. So if you want to get pretty, what you can do, you can actually hedge it, where you say, hey, I'll sell 5 of these and I'll buy 5 of the S&P over here, and basically you've locked in a profit of the spread of about 1.5 points. The thing you have to be careful about in that scenario is if the market really drops. So in that scenario, as long as the market's above 1825, you've got a guaranteed profit of about 1.5 or 2 points. Where you get into trouble on that is if the S&P drops below 1825 and keeps dropping. That's where you could get in trouble. So does that make sense to everyone? It's kind of like an ARB, you know, an ARB play where you're selling one and buying the other. But the way I would prefer to do it is say, hey, I think the S&P is going to go down. Rather than sell the futures, I'll sell NADEX and I'll give myself an extra point there. All right, so again, that's the third strategy, the small edge. Yeah, you can put TMAs on the charts in the NADEX chart, or are you asking about the underlying chart? I don't typically use a lot of that. Let me see. Add a drawing or study. Let's see. Moving averages. So I don't know if that's a ADMA or not, but there's a, oh, on the NADEX chart. Let me pull that up real quick. So let's look at this spread contract. All right. So here's the NADEX spread contract. See how it's traded as the markets come down, the spreads come down. So it had a ceiling of 1855. So for those that sold it up here, you know, obviously it was a good trade. Technical analysis. Chip, do you know can you do a EMA? I haven't done a lot with the technical analysis side. Yeah, and like WK said, you know, buying a straddle before major news using a spread. Yeah, there's a moving average. That's the normal moving average. I'm not sure if it has EMA, exponential moving average. I think that's just a simple moving average. But you can add some of this. Like I said, I haven't played a lot with the charting. I typically look at the underlying market. Oh, it's on the same scroll bar. Oh, there it is. Yeah, sorry about that. So, yeah, you could, you know, add the ADMA there. So, remove those and come over here and remove those for you. So there you go. Here's the ADMA. So it's pretty easy to use. I've never done that before, but you can see it's pretty easy to figure out. So we go back to the EMA here, and we just say, hey, I just want the 8 EMA, and put it on there. All right, good question. Learned something new. All right, do the trade types make sense to you guys? Okay, and like here's an example. Like we talked about that credit strategy. You can do both sides as well. Like here's a crude oil chart, an old one, basically where I said, hey, I think it's going to stay above 92 and below 93.50. So basically, I sold the 93.50 at 10. I bought the 92 for 81. So basically, when you do a trade like that, basically it's like an iron condor. And so kind of the power of that, and this is where you think of, is you can't lose on both trades, right? So it's either going to be below 92 or above 93. It can't do both, all right? So if you look at this trade, we bought one here and we sold one there. So we brought in a total, you've got a $19 profit on the first one, because if we pay 81 and the most it can do is go to 100. If we short 10, the most it can do is go to 0. So let's think of that trade. So we brought in 10 plus 19 is max profit, so basically $29, all right? And our risk is, the worst case is $90, right? So basically, we're making on our worst case scenario, we've got $29 divided by 90 is about 32% return on risk on that trade. So again, it can be there. There's lots of things you can do, and that's on a daily basis, right there. So again, it's important to understand. And you see on that trade example, see where I had sold it, or sold it at 10. It rallied up. It almost got to 50, right there, and then it came right back down. All right. Well, again, guys, I hope you enjoyed today's presentation. If you haven't traded on NADEX before, and I see Chip in the room. Chip is actually with NADEX. I appreciate you being here and helping answering questions. But I got an email from a guy the other day, and it's kind of interesting. He said, I was talking to him, and he said, look, I've made, and it sounds crazy, he had made like 400%. He had started out with $1,000 and made his account was up over 4,000. So I guess he made 300%. But basically he had done really well on his NADEX account. But he said, and I said, well, and he's a futures trader. I said, well, how have you done in your futures? He said, well, I've actually had a kind of a tough time with futures. And I said, I bet the reason is that your losses are a lot bigger than your reward, and you're taking big losses and making small gains in your futures account. And he said, yeah, that's exactly why I'm losing money. And he said, but I'm making money in NADEX. And I said, well, the reason is your risk is defined, so you're letting the trade work more, and you're not kind of hurting yourself in that way. And he said, it makes total sense. And so, and I told him, I said, look, and people do this all the time, all right? They say, hey, I'm doing great in NADEX, or I'm doing great in this, but I'm losing money in Forex, or I'm losing money in options, or I'm losing money in stocks. Well, I try to look at myself as an equal opportunity investor, in the sense that money all spends the same way, okay? So if I make money in NADEX, but I'm losing money in stocks, what's the solution? Is it to trade more stocks? No, it's, hey, stop trading stocks, just trade NADEX. Or if I'm making more money in Forex and I'm losing money in futures, what's the solution? Hey, there's no harm in saying, hey, I just can't trade futures. I'll trade Forex where I make money. But again, guys, I appreciate you being here. Here's the link if you want to open a new account. And Chip, I think there's new. We've got a new deal. If anybody opens, yeah, you can demo the account for free, and the demo is good for. Let's see, how long is the initial demo good for, Chip? Yeah, it's easier to. Okay, it's initially good for 14 days. And here's the way it works. If you just open an account, they'll extend that for a week. All right, and when you fund the account, they'll extend it for 2 weeks. And as long as you're trading, you can have a demo forever, basically. they'll keep extending it. And you can just email customer service. Chip, if you want to put the customer service email in there for me, that would be great. But you know, you can open an account, and kind of the cool thing with it is you can come into your account section. Let's say that, let me show you this. This is the way that once your account's open, let's say I want to deposit more money. I just click account funding. You make an e-check deposit, and basically you put your info in here, and they'll make it good almost immediately. But you know, put your name, your bank, and you hit submit, and the second you put it in there, you can do that. Or you can withdraw funds. You know, if you put a withdraw amount in there, you can do that and have it with an e-check. Basically means you just put the routing number in. So again, I said, and again, those were the 3 strategies, George, that we covered. Let me go back to them. We covered the credit strategy on daily binary contracts, the spread strategies on buying support, and then getting an edge, basically, and selling a spread. So, and again, this is, you know, here's the euro trade we're in. You see, we're still down. You know, we're down about $5 on it. We need the euro to rally, and that's a live trade. This is a small account that I just use for these webinars to kind of test. You see. So hopefully, you know, maybe the euro rally will make a little bit. But I wanted to just show you how how this actually worked, you know, with a live market where you can see the profit and loss, you can see the trade. And so again, if you guys see the euro rally, that means we make money. If it doesn't, then we lose the $6 that we took on it. Right now, if we get out and lose about $5 on the trade. You can also set, this is a good example, you can set limit orders. Yeah, you can set limit order, and it tells you there it's a live account. You see this account's got like $1,000 in it. So you see as we do trades, it'll tell you your available balance and everything that you can basically place a trade. So like let's say that I wanted to sell this and sell, you know, 100 contracts, it would not let me do that trade. All right, see the max loss. So whatever the max loss is, you have to have that amount in your account because every trade's collateralized. But if I wanted to do, say, 10 contracts on this trade, obviously I could do 10 contracts with that. The products you can trade are listed over here. So the indices, you've got the FTSE, the DAX, the S&P, the Russell, NASDAQ, and the Dow. That's the indice markets. Then in Forex, here's the spreads, the Aussie USD, Euro Yen, Euro USD, GBP, JPY, British Pound, US Dollar, USD CAD, USD Swiss, and then the US Yen. And then in commodities, commodities, you've got copper, corn, crude, gold, natural gas, silver, and soybeans. So basically, you know, yeah, like I said, you can click on that link right there. If you fund it with $100 or more and just place a trade, you know, you can continue to get the demo extended as long as you email customer service. But I'll tell you this, the guys at NADEX are really, yeah, you can trade weekly too. Let's see. I'll show you this. See how, here's the binary options where they've got a daily and then they've got a weekly. So like, let's say I think the S&P is really going to rally this week. This is the S&P at 1835 that you could buy right now, and basically pay $23, make 77 if you felt like the S&P would have to rally above 1835 by the end of the week. So you can trade weekly contracts as well. All right, does anybody else have any questions, either for me or for Chip? But I'll tell you this, one of the things with it, yeah, for the weekly, there's going to be a little bit bigger spread on that. For the intraday stuff, it's typically a tighter spread. Yeah, there's charts that you can use. If you look at this button, you click on, you click on a chart, basically, and it'll pull up charts inside the platform. Yeah, we did record, David. We'll get a copy emailed out to you, hopefully by this afternoon. And yeah, we'll send a link to the replay. And also, we put this together. Actually, it's a yes, Mark. Let me put this together real quick. There you go. We put this. This is a bunch of free videos. If you liked kind of what you saw here and want to learn more, you can click on that link. It'll take you through and get access to those videos. It takes you to a page. I'll show you right there. And basically, oops, there you go. So basically, you put your info in, and it'll email you. We'll automatically email you some videos on this. But there's some cool things you can do with it. We just wanted to touch on 3 things today, but really would encourage you at least to open a demo account, start testing it out. You know, if you have any questions, the guys at customer service at NADEX are really, really good. They're genuine about wanting you to learn about the product and help you. Chip is one of the best guys you'll actually talk to. His experience, he used to be on the floor. He's been around the markets for about, what is it, Chip? I guess about 50, 60 years now. You're getting up there in age. I'll tell you, the only, you know, nobody's perfect. The only fault I've really been able to find with Chip is he's a Ohio State fan. So, you know, nobody's perfect, but he does a pretty good job. Yeah, John, they are, but like I said, you just want to be very careful. You know, when I send money to people, I want to make sure that they're regulated, and I also want to make sure that they don't have a vested interest in me losing money. So those are 2 things I look at, you know, with any broker I choose. And so you got to be real careful. I've had probably about 2 or 3 people email me that had sent some money offshore and weren't able to get it back, you know, which is a very sad thing. It's happened to people. So that's why we're a big proponent. I love the contracts, you know, binary contracts, spread contracts, they're great, but you just want to make sure you're doing it with a reputable company. And so that's why I'm so high on NADEX. There's no, George, we're hoping in the next couple months you'll be able to, but what I would recommend is do a demo account right now. And yeah, Tim, there's actually another partner of ours, Daryl Martin, who he runs Apex Investing. He's also a big NADEX guy. He's working on it right now. Yeah, John, that's why you see that. You think about it, it's like, hey, why would you match my deposit by, you know, if I put $1,000, you would match my deposit. Well, you got to think that they're making their money back somehow. And we've had guys approach us, you know, at the TradingPub, binary option places, and say, hey, you know, we'll pay you $600 or $1,000, you know, per account that you refer to us. And you got to think, let's say, John, that they're giving you an offer to say, hey, we'll match you $1,000, and then they're paying us $600 to refer an account. Then they've got to, you know, they've got to be pretty confident they're going to make their money back off you in order to do that. And so you got to look at it and say, are the odds really in your favor? And you know, that's why we prefer to, you know, basically with these contracts focus on a regulated exchange, and think that you'll be much happier in the long run. And yeah, I tell you, I actually, RJ, I went to Auburn University, and so it's been a great year for us as an Auburn Tiger. And you know, we've got the national championship game on Monday night on the 6th. So I'm really excited about that. I have to tell you, I was a big Michigan State fan with them knocking off the Buckeyes. That had to happen for Auburn to get to go. So it you know, it made me happy in 2 ways. Number 1, I got to see my team go. Number 2, I got to give Chip a hard time about Ohio State losing. That's right, David, War Eagle. Yeah, I'm excited about it. So, RJ, you'll appreciate this. I sent the guys at NADEX a Christmas present, and in that I included an orange for Chip that said "Go Buckeyes," since they were going to the Orange Bowl instead of the national championship game. So, all right, guys. Well, we appreciate you being here. Like I said, other than that, Chip's a great guy. Everybody at NADEX is incredible. It's the best support we've ever received from a clearing firm. Yeah, Julie, I am trading NADEX. It's funny, the other night I have a Forex system that trades actually for me automatically. And I was looking at the system and it had gone long the pound dollar. And I looked at it and I said, hey, I like this trade setup. And I like this trade setup. And so I hopped on NADEX and bought 2 binary options as well and ended up making money on those. So it's kind of like a little extra topping. But yeah, I forgot about that, Chip. The delivery guy who delivered it was actually a Michigan fan, so that made it even better. So, all right, everyone. Well, you guys have a great day. Again, here's the link to open a demo account, and then here's the link for our free videos. But check it out, and then free videos. John, shoot me an email. I can give you some info on it. But shoot me an email. But I hope you guys have a great afternoon. And Chip, thanks to you for being here. Thanks to all you awesome people in the room. And we look forward to a good year with TradingPub and education. And we've got a 24-hour trade-a-thon coming up on January the 9th. So January the 9th. So thanks, Glenn. Thanks, RJ. All right, everyone. Have a great day.